we're about a 14-month-old company. Although we're an integral part, Cobalt is an integral part of the EV battery supply chain. Cobalt's about 3 years behind lithium in terms of the evolution of companies that are actually exploring, developing, and mining the commodity. I think with the settlement of battery chemistries around the NMC composition, there's been maybe a late realization on the part of miners that there's not enough cobalt in the world to satiate the EV demand. So this company came together about 14 months ago. Initially, we put 3 companies together end of last year around a town called Cobalt in Ontario, Canada, known as the Cobalt Camp, mined for silver. And we did this, then raised $30 million and became the largest cobalt explorer in the world, controlling a very large land package that contains 50 past producing mines. And if you look at the underpinning for this, I won't spend too much time on the supply and demand, but effectively, if you look between now and 2025, the projections are that the demand needs for cobalt are going to double from about 100,000 tons a year now to 200,000 tons in 2025. And the underpinning of that is almost entirely electric vehicles and the lithium-ion batteries there. We're batteries generally, so from cell phones to laptops to electric vehicles, are projected to account for almost 70% of demand going forward. So highly leveraged, obviously, the future of the lithium-ion battery. And on the demand side, it's DRC and China that are the primary players in the ecosystem. On the mining side, the DRC accounts for about 60% today, going to 75% with new production coming on stream. And on the refining side, China accounts for about 58% of refining worldwide, 80% of cobalt sulfate chemical production, which is the material required for battery production. The DRC's caused a lot of concern, of course, the geopolitical risk, and when you look at where the production is elsewhere around the world, there's nobody that comes close. And an important feature of cobalt as a metal is that 98% of cobalt worldwide is produced as a byproduct of nickel mines in most of the world, or in cobalt mines in the case of the DRC. And so why we're behind the 8 ball, why there's a supply shortage today, is because miners have never actually looked for cobalt for cobalt's sake. We're at a bit of an inflection point where people like my team are all of a sudden looking around the world for cobalt for the first time. And there's actually a lot of it, but I think we're in a deficit situation now that's likely going to persist for another 5 to 8 years, because it does take some time to go from exploration through to development. So there are showings, we've never focused on it, and the demand side is prompting us to try to play catch up. And this is our company. So on the one hand, you've got the larger, this is North America, you've got the big blue figure there is Ontario, province of Ontario, where we started the company and put the 3 companies together to lock up the Cobalt Camp. And more recently, we announced a friendly acquisition to buy U.S. Cobalt in Idaho. Idaho, a well-known copper cobalt belt, some beautiful assets there. One of our peers, Cobalt Solutions, has a development project in the belt, and we're basically trying to position our company as a North American player. And at the very heart of our strategy is the refinery that is in Canada, and it's a unique strategic asset. The feature of North American cobalt deposits is high arsenic, and in order to prepare materials for the market, you've got to remove the arsenic. You can't just produce a concentrate and ship it off to any refinery. We've got the one refinery that's got the permits to produce as much cobalt out of high arsenic ores anywhere in North America. So post-acquisition, about a $300+ million market cap company, $30 million in the bank, one more board addition, and as I said, that's on track. For those of you who don't follow the cobalt market and grades, here's an easy comparison of sort of equivalencies of in-the-ground gold and copper plays. So if you're more familiar with those traditional metals, it gives you a flavor for what a 0.5% cobalt grade means. 0.5 is a high-grade cobalt grade deposit anywhere in the world. So I'll start with the Cobalt Camp. That is the genesis of this particular company. This is Canada's oldest mining camp. So in 1904, we were building a railway up in northern Canada to bring produce into the cities, and the railway company stumbled upon a native silver vein sitting up on surface, and it prompted Canada's first really big mining rush, kind of like the Klondike Gold Rush, if you're familiar with that. That was the Canadian equivalent. Within 1 year, we had 10,000 prospectors that found themselves up in northern Ontario, and we very quickly thereafter ended up with 100 different mining operations over 50 years. But they were mining this narrow vein type deposit that you see here as high-grade silver underground deposits. And A lot of cobalt came out of it, but it was not a feature and not a focus of mining in the past. And our review of the camp shows us that there is a lot of potential there. And so we have a drill campaign this year. 15 of our 50 mines are going to be drill tested for cobalt potential. And the idea here is to go from outside of the veins, to go from the high-grade underground deposit to big bulk tonnage, sort of lower grade, higher tonnage operations as big open pits. And we've had some success. Initially, we were looking at some of the old waste dumps around the camp, and we got grades. If you look at that 8% cobalt, it far surpasses anything you see mined today. But of course, that's just a sample. And then we started drilling out, and we're getting a combination of high-grade veins in the cobalt, as well as some bigger widths, lower grade mineralization that you would need to come up with these higher tonnage type operations. Our latest success is in an area in the north of the camp called Kerr Lake. We've got about 100 meters in a mineralized zone. Going to bring a second drill rig in to test this, but it would be our first real indication of a potential open pit, high tonnage target within the cobalt camp. And then a little bit on the refinery, $100 million replacement value. As I mentioned, the key feature is its permits. The permits are already in place, and you can see the footprint. It sits on 40 acres, expandable to 120 acres. We're looking at a restart of the facility, expanding it, restarting it, and getting it to a cobalt sulfate production status. So adding a precipitation unit on the back end. And with the recently announced acquisition, this is an asset that's going to come increasingly in focus for us. So we've initiated a study with Primero out of Australia and expect some news on that in the next few months. And then the latest acquisition, not yet done. This is about 5 weeks away. So if you look at our stock, we've been under pressure with the general, I guess, macros that sell off the cobalt names, but also this transaction has created a pretty good entry point while we complete this deal 5 weeks away. But the Idaho Cobalt Belt, you can see it here, the contour of it. There are a number of deposits in this area. The majors haven't moved into the cobalt space. It is a lot of juniors, and it provides companies like us an opportunity to consolidate some of these assets. This particular asset had a historic resource of 1.3 million tons, grading at 0.59% cobalt, which is almost double the grades that you would see out of the Congo. I believe what we will see is likely a doubling of that resource before we're through, and probably grow from there as well. So the opportunity in this particular camp, this deposit sits on permitted property. So we're giving ourselves kind of a 3-year horizon from the closing of the acquisition to the potential for some early cash flow using our refinery. And this would be, in our estimation, probably the quickest pathway to production relative to what we have in Ontario. And here you can see the nature of the mineralization. They got 3 adits. We were underground looking at the mineralization. They're drilling underground. We got 600 meters of drifts in an old resource that was drilled up by Noranda, and you can see the red contour of the ore body. This thing continues to grow and will continue to grow. They've done an excellent job drilling this out. And on this next image, you can see how the image has gotten a little bit thicker. The ore body, good continuity, good geometry, and from a miner's perspective, relatively easy to build because it's a small, discrete ore body. This will be mined at about 600 tons a day, all underground, sitting at 70 degrees. So from a development perspective, very attractive. And you can see through their drilling, we've got 2 new lenses. The darker tabular body is the historic resource, and the dotted zones are 2 new lenses they've discovered over the last 6 months of drilling. And then lastly, we've got early cash flow opportunities in the cobalt camp. We've got, with historic mine sites spread over 100 square kilometers, we've got 50 mines that we control and another 50 that are controlled by other parties that have waste material sitting on surface, waste material that would not have been economic 50 years ago that is potentially economic now. And so there's a lot of studies going on with our mill and our refinery to see whether there's some early cash flow opportunities that could bring us into a cash flow situation sooner than later. And so that's it. North American story, high grade, lower tonnage in the case of Idaho, and you got the reverse here in Ontario, refinery, and pretty straightforward mineralization and processing strategy for us. So with that, I thank you for your time.